three business lines with completely three different equations, both financially, how we operate and how we sell, to allow us this balancing act of managing margins as we go along.
Okay. So that takes care of the operational part. Now, Anand, I want a view from you on the top line, then we'll come to the bottom line. What drives revenue growth for you? Because now, let's just look at it. A lot of companies at this stage, the first aim or the first milestone would be to become a billion-dollar enterprise.
Absolutely.
Does Persistent foresee that over the course of the next 2 or 3 or 4 years?
No, I don't want to put a timeline to it, but definitely we see ourselves as a $500 million company first, and then $1 billion company in the future. And we are working on it, both in terms of internal systems, trying to get the leadership in place, because at the end of it, it's a teamwork. And you have to build your team to get to a point that can sustain and run a business at that level. So yes, we are doing all the things that are needed to ensure that we could first be a $500 million company and then eventually $1 billion company.
If you really outline those, I mean, what drives growth for Persistent?
Right. So if you look at these technology areas that we are doing, or some of the investments we have made, the partnerships we have set up, we are very early in the sort of technology curve that you would see enterprises going through. And we believe that the disruptions that are going to happen in the next few years bode very well for Persistent. So the way we are thinking about this is it possible to create a, let's say, $100 million business in cloud computing? Or how does one create a $100 million in big data business? Or a $100 million mobility business? Is it possible to create a $100 million life sciences business? So we have fragmented our total business opportunities into 7, 8 different buckets, where each of them have enough activity, market potential, and Persistent's current capabilities are such that one can imagine a $100+ million business in each of these areas.
No, so I'm sure the answer to those questions is yes. The question really is that, are you seeing that kind of business starting to trickle in for you to become that $100 million in each of the segments?
Absolutely. So we have seen growth in those areas. So for example, we are seeing significant growth in cloud computing and businesses around big data and mobility. And we are seeing growth in these areas. So those businesses where we were, single-digit million, now we can see we are in the 10, 20, 30 million already in some of these areas. And, it's not quite 100 yet. We have a long way to go. But the trends are definitely there. And if you look at the market segments and what people are talking about, what is happening in big data or cloud computing, the numbers are extremely large. So I don't see the market being the challenge. Our ability to execute to the market requirements would be the biggest challenge in terms of what is holding us back from getting there.
Okay. A question that a few people had really was that a lion's share of your revenues comes in from a single geography, which is North America. Now, how do you mitigate that risk? Because should there be some crisis in a region, then that will, I'm guessing, dampen your growth prospects significantly.
See, when you look at product companies and you look at product development work that we do, that market is heavily dominated by US companies.
Okay.
Today, if I ask some of, and we do this exercise all the time internally, saying, name me 5 companies that are non-North American, which are building products. Give me 5 European companies, 5 Japanese companies. It's very hard to name them. So if you look at the market, it's very dominated by North American, US-centric companies. And that's been traditionally the way the Silicon Valley companies have worked. Now, most of these companies are selling globally. So these are not, some of the companies that I work with are several billion-dollar companies already, and they are globally distributed. So even though my customer is a North American customer, the customer itself is a global company and has business distributed across the world. So that said, our dominance in the North American market, I think, is going to continue for some time. Beyond that, what we have seen through the partnership work that we are doing with some of our partners, some of that work is coming in from Europe or other regions as well. So we are starting to do more in other regions, but see, today we are doing almost 93%, 90, 95%, 90% or so in the North American region. And even the non-North American work that we do in India or in Europe is from North American companies in those areas. So, it's very heavily North America-driven business.
Okay. Lots more to talk about with Anand Deshpande. In fact, a look into the future as to where does the company go on the bottom line front as well. But here out, as we take that break, one more voice which is very bullish on the stock.
Persistent System is a leading service provider in offshore and a niche and rapidly growing product development space. With its concerted effort of nearly 2 decades of product development, as well as long-term relationship with global software vendors, has resulted in Persistent having a strong vantage point in the offshore product development market. The strong relationship with the line of business heads in the client organization is also helping it grow because of the increasingly higher decision making being done by them. The early investment by Persistent in new growth areas of analytics, collaboration, mobility, as well as cloud has resulted in a strong growth for the company and should continue to help the company to drive growth. It's another success factor is its investment in the IP business. The IP business is a non-linear component for the company, which has grown from nearly 6% of the revenue in FY12 beginning to now 18% currently. So this is a strong margin as well as revenue driver for the company. Overall, our interaction with the company suggests that the strong traction for the traditional business as well as the IP business should continue.
Persistent is one of our preferred mid-cap IT buys. We like Persistent for several reasons. Number one, it's a leader in its niche. It is a leader in offshore product development, an area it's been focusing on for the last couple of decades. And also it's sort of evolved to technology changes better. What I mean with that is they have focused on some of the faster growing areas such as the cloud, mobility, analytics, collaboration ahead of others, which positions them well to sort of serve the waves of technology change in coming periods. We also like the fact that the firm has a very partner sales model, which means they partner with some of the software companies they work with while selling. So this gives them a wider customer access. They can reach out to more customers through the partners, and also it gives them a lot more credibility to deal with new technologies compared to most of their other smaller and larger peers. We also like the fact that as the IT buying trends are changing from the CIO's office to the Chief Marketing Officer's office, Persistent has been able to change its sales teams to access that route of revenue sales. And finally, it trades at a relatively attractive 9.5, 10 times, which is attractive for a firm of this size.
The Indian economy is doing okay. It could be doing better. I think that recipe is similar for many other emerging markets, and until that growth gets a little bit stronger, it's really hard to see investors globally allocating more money to emerging markets.
Bob Dahl analyzes the investment climate for emerging markets on the FIIU. Only on ET Now.
Okay, back on ET Onsite with Anand Deshpande. Anand, we've spoken about the top line growth. You've spoken about the aspiration to be $1 billion company. Operationally, things look okay. Now let's just focus on what it does to your shareholders and investors. Would you need, over the course of the next 1 year or 2 years, to raise any kind of funds from the market in order to drive your acquisitions, or are you comfortable with the cash positions and the cash flows?
See, at the moment, from what we are planning in terms of the small acquisitions that we need to do for our IP strategy, I don't think we really need to raise money.
Okay.
But there will be consolidation in the market in the next few years, eventually. And if should that happen, one can look at raising money or doing some other non-linear acquisition. At that time, maybe there's some requirement. But that's still far away. We are not planning anything right now.
You wouldn't want to sell out to any large company should an attractive opportunity emerge, right?
No, there's no plan at this moment. At least we are quite happy running it. We see a future for ourselves, so we don't have any real plan to sell out at the moment.
Okay. If I look at your growth over the last 2 or 3 years or 4 years or a ballpark 5 years, you've done an average of 30%, give or take a few percentage points on the top line and the bottom line, roughly. Without getting into what you will do for FY14 specifically or FY15 specifically, do you think a CAGR growth of 20% top line, bottom line, give or take maybe a few percentage points, is a distinct possibility?
Yeah, absolutely. We want to see that, and we want to see more than that. That said, there are challenges in the market in terms of where the market is moving. So it is going to be hard to predict every quarter that number happening.
Agreed.
I do anticipate that if we get some tailwind, which we are working very hard to ensure that we have technology spaces and boxes where we are positioned. If we get some good tailwind, we could grow much faster than that on a couple of years as well.
NASSCOM guidance is 12 to 14. You are not pure play in the scheme in the way
that is for
tech
next
companies
year.
are. Yeah.
No, that is for next year. That's the NASSCOM guidance for next year. See, what happens is that companies don't grow in a linear fashion.
Sure.
You see certain things you have to invest in, and when you get to a particular point where you hit certain thresholds, there's some tailwind you can get, the market moves in a particular way, you will see discontinuities in growth.
Sure.
So what we are counting on is that some of the investments that we have made in new technologies such as cloud analytics, collaboration and mobility will give us that opportunity for seeing some, non-linear, meaning sort of sharper growth than we have seen in the past few years.
So CAGR growth for the next 3-4 years of 20% is not out of possibility. It could actually be better than that too.
Yeah, meaning our aspiration is to do more than that, sure.
And lastly, just from the perspective of a retail shareholder, you've had a good dividend payout policy.
Okay.
Do you stick to that? 30% if I'm not wrong is something that you stick to?
Right, so yes, meaning we have been, again it's for the board to decide exactly what the dividend is, but we will definitely continue to pay dividends at least this percentage rate that we are doing right now.
Great, Anand. The market loves what you're doing. Keep up the good work. And thanks so much for being part of this leg of ET Onsite.
Thank you very much, Niraj. It's been a pleasure talking to you, and I hope to talk to you again soon.
Sure.
Thank you.
As your favorite channel ET Now turns 4, it's time to reaffirm faith in the India story. The macros may be weak, markets volatile, and business confidence shaky. But there's no better time than now to make a clarion call. Yes, we can. 10% growth isn't impossible. Catch India's top CEOs engage with Commerce and Industry Minister Anand Sharma and renowned dignitaries in a special and exclusive panel discussion, Yes, We Can. Only on ET Now.
Brought to you by HCL, technology that touches lives. Buy, sell, rent at India's #1 property portal. BSE, Investors Protection Fund.
ओह पाजी पाजी छोटा सा बिजनेस था हमारा, आपकी आईटी ने तो
हमें इंटरनेशनल बना दिया।
Hey, our sky's a lot safer, thanks to you guys.
Mr. HCL! Mr. Banker, can I have my jacket back?
From India to across the world, HCL's technology touches lives everywhere.
Soaring to unimagined heights, envisioning a new world. One world, one journey, one name. Binance, for generations to come.
आप हमें चाहते हैं ये आपको प्रूव करने की जरूरत नहीं, लेकिन आप केबल टीवी सब्सक्राइबर हैं, ये प्रूव करना जरूरी है। इसके लिए अपने केबल टीवी ऑपरेटर से सब्सक्राइबर एप्लीकेशन फॉर्म लेकर उसमें अपने डिटेल्स और मनपसंद चैनल्स के नाम लिखकर सबमिट कर दीजिए। उसके बाद आप सिर्फ उन्हीं चैनल्स के लिए पैसे देंगे जो आप देखना पसंद करेंगे। और हाँ, अगर आपने ऐसा नहीं किया तो आपका केबल कनेक्शन हट जाएगा। तो आज ही अपना सब्सक्राइबर एप्लीकेशन फॉर्म भर के सबमिट कर दीजिए और अपने फेवरेट शोज बिना रुकावट के देखिए। तो जल्दी कीजिए।
I think what markets are looking forward to really is some kind of stability there. Then, currencies start stabilizing, you price in the reality out there in the bond markets into different currencies, and, that enables us to know what's the kind of hit we are going to take in our key macro variables, be it inflation, be it the fiscal deficit, and also the stress to corporate balance sheets.
Catch Bharat Iyer on Market Makers, only on ET Now.
We need a wholesale relook at the regulations that govern doing business, starting a business, staying in a business, closing a business. And we have to make it such that it's easy to do it. It doesn't matter if you're a 3-man business or a 1,000-person business, it's too difficult. We need to make it easier.
Catch Raghuram Rajan in an exclusive conversation on ET Interview, only on ET Now.
Bonjour, bienvenue.